First element in two-sectors economy is household. Household supply labor to a firm and receive income. Using that income, household will spend to get the goods or service, and it's known as aggregate consumption or C. Consumption by individual household is known as personal or individual consumption, while the balance for expenditure is known as saving or S. Therefore, these two relationships between three variables. First, YD is equal to C plus S. YD is a disposable income equal to C consumption plus S saving. Next, I will explain about consumption and consumption function. As we know, consumption is a sum of expenditure on durable goods, non-durable goods, and services. Based on Keynes' assumption, consumption depends on disposable income, which is YD, and consumption and disposable income have a positive relationship. When disposable income increases, consumption also will increase but in lower rate than income. When the change in disposable income is greater than the change in consumption, it's shown by the marginal propensity to consume or MPC. When we look at a consumption function, which is C is equal to A plus B YD, it's shown a positive relationship between C and YD. C is the total consumption by household in the economy, while A is autonomous consumption. Autonomous consumption is defined as an expenditure that consumers must make even they have no disposable income. When disposable income is equal to 0, aggregate consumption, which is C, will equal to A. This is show autonomous consumption is independent from disposable income. Next is MPC, or marginal propensity to consume. It can represent by a symbol B. MPC is a ratio of change in consume to change in disposable income. So the formula is MPC equals to change in C over change in YD. We need to know the value of MPC can be only between 0 to 1. MPC also represents the slope of consumption curve.
Now we talk about saving and saving functions. By saving, in a two-sector economy, saving refers to the portion of disposable income that is not spent on the consumption. The basic formula for saving is S equal to YD minus C, where S is saving, YD is disposable income, and C is consumption. This means that the saving is simple, the income left after you spend on consumption. Now let's talk about the saving function. The saving function describes the positive relationship between saving and disposable income. In simple terms, the saving function shows how saving changes as disposable income changes. The formula for the saving function is S equal to minus A plus 1 minus B YD, where A represents autonomous consumption, B is the marginal propensity to consume, MPC, 1 minus B represents the marginal propensity to save, MPS. Now we move to marginal propensity to save, MPC. MPC equal to 1 minus MPS minus 1 minus MPC, where MPC is marginal propensity to consume, the MPS is always between 0 and 1. Here, saving function curve. Now we move to firm. In a two-sector economy, firm acts as purchaser or supplier. Their expenditure are primarily in the form of investment. Investment in turn can be broken down into the type, which is actual investment and planned investment. Planned investment refers to the investment made or planned involving additional capital, stock, and inventory by firm. Actual investment is made by firm and involves change in planned inventory and stock. In this discussion, we should focus on planned investment. Planned investment is an autonomous variable symbolized by I. An autonomous variable is one that could not depend on aggregate output or income, as seen in figure 12.3, which shows a horizontal investment curve. Other than that, investment also can be influenced by factors such as investment, interest rate, cost and efficiency of capital growth, demand of product, business tech, and expectation for the future.
Next, I will explain about equilibrium determination in two-sector economy. Equilibrium will achieve when aggregate demand is equal to aggregate supply. Equilibrium that can be determined by using two methods. First, we use expenditure approach, and second, we use injection leakage approach. Equilibrium also can be represented by tabulation, numerical, graph, and also diagram. First method is expenditure approach or Keynes approach. Expenditure approach is a total output or income equals to aggregate expenditure. As we know, in two-sector economy, the expenditure is only came from two elements, which is household and firm. Expenditure from household is aggregate consumption, which is C, and expenditure from a firm is investment, I. Therefore, total output is equals to AE, which is C and I. This equilibrium also can be exist in two situations. First situation is when aggregate output greater than aggregate expenditure. In this situation, inventory will increase because of sales less than production. Therefore, the real investment will be greater than the planned investment. So, to achieve equilibrium level, firm need to decrease aggregate output. Second, this equilibrium also can exist when aggregate output is less than aggregate expenditure. It will cause inventory decrease because of sale greater than production. Therefore, planned investment will be greater than the real investment. So, to achieve equilibrium level, firm need to increase aggregate output.
Now, injection and liquor approved in a two-sector economy. Injection refers to any additional expenditure that enter the income seasonal flow. Liquor, on the other hand, is the opposite. It refers to any reduction in expenditure that live in income flow. To put it simple, injection add to the income flow investment. Liquor remove the money from the income flow saving. Equivalent is reached when the amount of injection equal to the amount of liquor. The equilibrium condition is represented by the equation S equal to I. S is saving, I is investment. When S equal to I, the economy is equivalent. The total income in the economy is neither increase or decrease. The equation as we can see on the side. Injection, liquor approved. The equilibrium can be represented by tabulation, numerical, injection, and then graph and multiplier.
Household is receive income in the form of salaries from the firms and receive scholarships from the government. For the transfer payment known is the form welfare and unemployment from the government to household. In return, households are able to be a consumer expenditure and pay the taxes to the government. In other words, household can supply factories of production like labor, capital, and land to firms. Next, firms. Firms are the producers in the economy. They take the factors of production provided by households and subsidies from government by use them to produce goods and services. In return, firms are able to be a factor payment like pay the households as their labor and pay the taxes to the government to provide public goods and service like education and infrastructure. The government also makes transfer payments such as welfare and unemployment benefits to support household consumption. Additionally, the government spends money on goods and services produced by firms. It also offers subsidies to firms, reducing production costs. The action to help sustain firms' operations, boost economic activity, and support households.
Here, I will explain about equilibrium in three-sector economy. In equilibrium three-sector economy, it has a tax. The tax definition is net tax is the tax charged to household and firm by the government minus transfer payment provided by the government to household. Tax can be divided as lump sum tax, progress tax, and proportional tax. Lump sum tax is the amount of tax charged regardless of the level of income. It is also known as fixed tax. Progressive tax is the rate if tax charged and it positively related to income. It means that if income rise, the rate of the tax also rise. The third one, proportional tax. If is the rate of tax charged out of income. The rate is fixed at all level of income. But at this moment, assuming the discussion only focus on lump sum tax and proportional tax, it can be individual or a combination or both. Next, while in the three-sector economy, which is include tax, the aggregate output is no longer equals to disposable income. Disposable income can be divided into consumption and savings, which is Y is equal to Y minus T and Y equals to C plus S. In a three-sector economy, equilibrium is achieved when aggregate output equal to consumption plus investment plus government expenditure, which is Y equal to C plus I plus T. I also will explain about graphical equilibrium in three-sector economy. When the line intersects the 45-degree line, equilibrium national income is determined. An increase in government spending shift the aggregate demand curve upward, rising equilibrium income. Overall, takeaway is that government spending play a critical role in influencing national income and economic equilibrium.
For three-sector economy, the equilibrium condition is the same in the two-sector economy. The difference is only in the components of aggregate expenditure AE, which is the inclusion of government expenditure. Therefore, AE equals to C plus I plus T, while the income received goes to consumption C, savings S, and payment to taxes T. The summary of equilibrium condition is as follows. Equilibrium determination can be measured by using tabulation, numerical, graphs, or diagrams. Table 12.4 shows that aggregate output Y equals to aggregate expenditure AE when Y and AE at RM 6,400 million. The following is numerical method to get equilibrium determination. The only thing that you need to remember is let YD equals to Y minus tax. For previous one, we are using income expenditure approach. So now we are using injection leakage approach. For three-sector economy, it is S plus T equals to I plus G. The solution based on the example. Firstly, determine the value of government expenditure multiplier, which is kg. kg equals to 1 over MPS, which is 1 over 0.2 equals to 5. Next, determine changes in aggregate output due to an increase in government expenditure. G. Based on the example, government expenditure increases from 320 million to 370 million. It means that the changes in government expenditure is 50 million. The solution is as follows. Lastly, calculate the new equilibrium of aggregate output as follows. Based on the answer above, we know that there's an increase in government expenditure by 50 will increase aggregate output by 5 times, which is the new equilibrium of aggregate output, which has increased from 6,400 million to 6,650 million.